What's good, guys? In this video, we're going to talk about Microsoft, which we ended up closing an $11,000 profit on today. We're going to go over the trade, which was a 15-minute setup, but I want to also go into where I think Microsoft is going to be headed in the next couple of weeks with earnings coming up tomorrow on the 30th. Now, the first thing to note is we're going to zoom out on the daily chart. If we look at how price has been moving for the past couple of months, you're going to see that we are obviously in a very strong uptrend. You can see also that bullish market structure has been very strong. Every single time we usually break out, pull back into our support level before moving our next leg to the upside. Now you're going to notice that if we take our Fibonacci retracement from swing low at $412 up to swing high of about $467, that our golden zone, or the level that we're looking to accumulate shares in, is sitting right between $426 and about $419. Last week, we saw price push through that support level, but big money stepped in the very next day and propped price right back up. You can see as well that the BX trender, which is this indicator at the bottom, is showing a higher low, which is confirming the fact that the bulls are stepping in and that we're getting bullish accumulation. From this point, I'm expecting price this week to most likely move its way back up to 440, 444, or even $452. Of course, this is going to have to coincide with earnings. If earnings come through, they don't give good guidance, they don't have good numbers, then we could easily see this entire pattern break down. The stop loss in this level would be about $411, and you're going to notice that the market bias for the weekly is still sitting here at this level, and each and every single time that price has pulled back into the market bias since breaking above it back in February of 2023. So this has been a very strong support level for the past couple of years. And I think that it's going to be a support level here once again. If we look at the 15-minute chart, the reason that I took this trade in the first place is that we saw a massive sell-off, like we said, last week. And as we were pulling back into the golden zone, what I was looking for is I was watching to see if we could take out an old high. So as price is selling off, we're watching it bounce, and in most cases, if we take a Fibonacci retracement, it's going to bounce within this golden zone. So about $427 is what we teach within our courses. The link to use all of these indicators is going to be in the description completely for free. What we're looking for now on a smaller time frame is for price to actually come back up and break this resistance level, or this most recent high of $426. Once price breaks back above that level, that is called a break of structure. Something else to note here is that we tapped right off of equal lows, which is a very good sign that we're probably going to bounce. So now that we've taken out this resistance level, we know that price is probably going to pull back before making another high. So instead of drawing our Fibonacci's now from swing high to swing low, we're actually going to draw them from swing low to most recent swing high. And what we're watching for is to see if price can pull back into our EQ and bounce. You'll notice that price did not pull all the way back into that range. Instead, price actually ended up bouncing prematurely at about $424. So once again, we take our fib from swing low up to swing high, and you'll see that price once again comes right into that golden zone before bouncing. This was the first hit that I ended up taking, and I closed my profits right around $429 because we expect price now, once again, to do what it had done before, this time on a smaller move. Swing high to swing low, we're waiting for price to pull back into our Fibonacci golden zone, which is exactly what we were looking for. And now I actually swung this position overnight. So this trade was fully closed, but I'm still holding a position overnight because I believe that we're going to break through this resistance level into tomorrow's session. You're going to notice that we rejected off this level to perfection, and this is now going to be what's called a liquidity zone. There's a very good chance that we're going to move our way back up into this thin area of volume and fill this potential gap back to $442, which is what I'm expecting to happen within the next couple of days. I hope this video helps, guys. If you want access to all my trades, all of my setups, all of our indicators, they're all free in our resources down in the description. Thank you guys for all the support, and I'll see you next time.